Welcome, 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 welcome. I want to quickly welcome every single one of you on this call tonight. And I want to go straight to the point, sharing all that we have today. Yesterday, we took a lot of time looking at the market. Yesterday, we were able to see the 7 ICT institutional reference points. And I could remember vividly yesterday we were pointing towards the closing time, NZD. We're pointing towards NZD at Oanda. And I remember clearly yesterday we had, I think somewhere around, can't remember again where we marked, but we had an analysis where maybe let me see if I can find that particular analysis. And let me also share my screen, please, to begin to show you what I'm talking about. Let me see if I can find the analysis for yesterday. If I can find it, I wish I could find it. I am sorry, I can't find it. Anyway, we had something on NZD USD yesterday. Because I couldn't find it, let me start the class today without saying analysis.
Hello, sir. Can I share it to you? It's like I screenshot it.
Okay, please send it to me directly. That is the one from the monthly. Yes. Yeah, like this. So what I did yesterday was to mark that this point. And we zoom in, we'll be able to zone it properly. And we use this place as well. We use this place as well. It will be the mid range. We want to pay attention to this place. Allow this place to be extended a little bit so we can pay attention to it. So the process of doing this is called mapping. We put this also here. We want to pay attention to this. And as well this. And finally this. Then we drop down to weekly time frame to look at any of these areas that are important. I think we have this one. We extend it to touch this because it's the weekly area. Then there's nothing here. We can just bring in a weekly horizontal ray to hold this guy. I think we're good. Then here, we can expand this one to get into the weekly zone here. Then that's all we could do on the weekly. The closest place to the chart are all these lines. So we're not bothered about all this other side. We're bothered only about the side where the price is. If we drop down to daily, we can, at this point now, go back to candle. So we can see and look for our entries. So we have the setup on daily looking like this. And we have a 3 candle pattern. 1, 2, 3, in fact, 4, showing us sign of something that looks like the beginning of a new move here. This support is holding this price, and this move is about to kickstart from here. If you go a little bit backward, like weekly, you notice that we need to see the whole of this week end in bullish engulfing, and we need a pullback that will come back for our entry at the support level at 0.5611. That's what I notice here, and I'm sure everybody can see that too on the weekly. If you go down now to 4 hours time frame, you will notice that the structure that is being formed on 4 hours time frame, number one, the structure here is showing that we have a break. Market structure shift happened here already on 4 hours time frame. So even if we are looking at head and shoulder pattern being formed, then we have the move from here, the first left shoulder, the neckline here, the head here, the second move here. The final move we're expecting now is the neckline to drop down to the area of, I think this is a situation where we talk about breaker block. Drop down to the area of the breaker block. I remember we drew this area as the breaker block area. Anyway, and I remember now that we separated those two lines by putting the breaker block mark. So where we have the coinciding breaker block versus supply level is also coincidentally, if you look carefully, where we have this particular red candle that came down before all of this happened, before the break of the structure happened. So this red candle happened now to be an order block. So you see, we bring this here, there's an order block here responsible for the break of that move. If I change this color to say something like this, no, I bring it something like, let me make it this, and make it like this. So there's an order block there on 4 hours time frame, telling us that we have a breaker block coinciding together with an order block, coinciding together with a demand zone. So if price comes into this area, 56, around 0.5610, down to this area, 0.5602, we want to see a reaction from this, within this overlapping area. We want to see a nice reaction, and then we take it to the upside. That's what we are planning to have on this. And we are going up this time around. We are going up the same size of this move, which is from the top to the head. The same thing we take from the head, from the neckline to the upside. So this height is expected to be all the way to this place. And this also coincides with this guy. And I remember yesterday saying that we are targeting the next resistance, which is the monthly resistance. That's our main target. So, but first take profit will be around this zone, which is exactly the same as this. This looks like other block here, but that green candle there is the resting area of the market. So we are targeting this place as TP1, then the other place as TP2. So that's the entire point. But we want to see a reaction. A conservative trader will always wait to see a reaction. Without a reaction, the conservative trader will not start trading. What is a reaction? We want price to come down there, show us sign of bullish engulfing, H4. Then we drop down to M15 or M30 to look for our final entry system. Then we go into the market. Our final entry system, then we go into the market. So that is the plan we have for NZD USD. We showed this yesterday. So today, we are going to be asking ourselves a very important question. Now, if we have the price come down to entry area, we still need a confirmation on the fundamental side. What we have simply done is we have done top-down analysis. We have found our entry zone, price come down to our entry zone, but we are yet to see confirmation on fundamentals. So it's very important that we go and check what is the fundamental saying, because the fundamental at the end of the day move the market. Fundamental controls this market. This market is controlled by the forces of the fundamentals. So even if you are done with your technicals, you still need to ask the fundamental before you pull the trigger. Or while you are pulling the trigger, you want to know what is actually happening before it happens. You want to know the situation of things. In fact, mostly trader advise that you have to check the fundamental before the week starts. You have to check the fundamental when the week is in progress before you enter your trade. You have to also check the fundamental at the end of the week. 3 times you check the fundamental. Let's say Sunday night, you check the fundamental and write it down, especially the ones you are watching out for. Then while the trade is in session, middle of the week, Wednesday, Thursday, when the market starts moving, you check what's the situation of the fundamentals. Then at the end of the week, market is over, Saturday, probably Friday or Saturday, you check again the fundamental. How did it end? So you have a knowledge of before, during, and after. That way, you know that, okay, you are aware of the general fundamental sentiments of the market. So where do you go to check the fundamentals? Starting from Forex is the Forex Factory. The forexfactory.com is one of the places where you can easily find Forex news. Yeah, I'm aware that so many brokers have included Forex Factory in the back office. So if you are in the back office of some of these brokers, you don't have to come to Forex Factory to look for fundamentals. It's right there on the back office. Especially some more recent brokers that we are currently using now. If you are in their back office, you can find the fundamental news. You can find your trade execution. You don't need to come back to MT5. You can find the copy trading system. You can find everything inside the back office, all in one-stop shop. And I give it up to those kind of brokers that have made life so easy. So you don't have to leave here, enter here, leave here, enter here, leave here, enter here. You have everything on one dashboard. You don't even need an MT5. You execute your trade. Even the entire trading view we are looking at, I can show you maybe on a very good day, a broker that gives you everything on their platform. So you don't have to leave their platform to go and trade, to go and check trading view. You don't have to leave the broker platform to go and check fundamental. You don't have to leave the broker platform to go and check whatever you need to check anywhere. You stay on the dashboard and everything is inside the dashboard, including your trade execution, MT5. All right. With that being said, just like a digression. The traditional place for you to come and find fundamental is Forex Factory. When you come to the Forex Factory and it opens automatically, it shows you Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, and Saturday. So that's the entire week. So today is Wednesday. If you look at it, where we are today is Wednesday. So all of these are supposed to happen today. Where we are right now, we are around 7 p.m. So what is going on right now in the market is happening with the USD, and it is about the 30-year bond auction. So that has nothing to do with any of the thing we are trading right now because it's a yellow file. There are red files, there are orange files, there are yellow files. If you touch the red file, they are the high impact files. That means this news is very important to the market. If you touch the orange one, you see the name on it is a medium impact. If you touch the yellow one, you see the name of it is a low impact news. So we pay more attention to the red files. These red files are the ones that we pay attention to most at the time. Therefore, when you open Forex Factory, you go to the top right-hand side where there is right filter. You click on that filter and you are able to remove this one, leaving only the red files. That apply filter will keep only the red files available for the week. It makes your work easy. On Monday, you are paying attention to Euro because there's a red file coming in Euro. So you want to see how that red file ends. Usually this is going to happen all day in the Euro. So you want to see what is happening. If the volatility is, if the trend is in line with the Euro, you know that this file is in favor. Of course, it comes out green. So it's in favor of the Euro. So there will be more power in Euro versus USD if the price is going up. There will be more momentum and more volatility. Now, if you look at the next one on Tuesday, we are seeing that Tuesday has CHF, USD, USD. So we are paying attention to anything CHF, anything USD. So in that of CHF, you see we have a weak CHF. So CHF comes out weak. We are expecting USD CHF to go up because the CHF is weak. Therefore, USD CHF cannot be going down because CHF is weak. Then at the same time, okay, this is 8:30 a.m., 4 p.m. on Monday, we have a red file for USD that shows green. Green means strong. If the number is written in red, it means weak. If the number is written in green, it means strong. So here for 4 p.m. on Tuesday, dollar was showing a lot of strength, strong. Forget about the jargons here. You can read about it if you are interested, but just look at the number. Is it green or red? If dollar is showing you green, it means that there's strong momentum in the dollar. So when you are doing an analysis, if the analysis is saying that you should go in the direction of the dollar, this is confirming your analysis that yes, you can keep going in the direction of the dollar. But if your analysis say go against the dollar, and here you see green for dollar, you have to be careful with that, your position. Keep your stop loss far away. Or pay keen attention, because there's a reason why your trade is not supposed to go on the fundamental. So you always want to be in the direction where the market is going, right? And you always want to wait for the news to play out first before you decide to pull your trigger to go in. So for Wednesday, we see the AUD CPI. What am I saying? Today is Tuesday, not Wednesday. I beg your pardon. So there's a strong dollar. There's a strong dollar for today. No wonder the market moved the way it moved. So tomorrow we are expecting AUD to move. Tomorrow we are expecting USD to move. Tomorrow we are expecting USD to move. Tomorrow we are expecting USD to move. So there's a lot of movement on the USD tomorrow. So we are going to look for where we are going to trade the USD if the market or if the analysis is in favor of the USD. Tomorrow we are going to look for where to trade the USD. There are 3 high impact news coming for the USD. So we are going to look for any pair that will favor the USD on a higher time frame, that will give us a nice setup on a lower time frame. If this news comes out in favor of the USD, we'll look for our entry. What time are we going to look for our entry? After the news by 2:30. That's the best time to look for our entry. Don't look at the market before the news happen. Your major concern is to wait after the news is over. If the news is over and you see a green on the green number written on the news, then go ahead and look for the position in favor of dollar. If you can't find a position in favor of the dollar, don't trade that asset. Because you want to trade in line with what the fundamental is saying. You don't want to be trading against the fundamental. It's going to reduce your win rates. Yeah, you can win. It's like swimming against the tide of the river, saying that this thing technically must be like this. But at the end of the day, the fundamentals have the day. So you want to respect the direction of the fundamental, because this is what is making the numbers change. Then after you finish your trade for after 2:30, the next trade you want to pay attention to is what will happen by 8 p.m. So you see the direction of the market moving by 8 p.m. If the direction is going in favor of the dollar, it means the FOMC minutes. There is no number to be written here. They will not put any number there. And this is usually crazy. So you have to go with the trend to see where the price is trending towards or after the 8 p.m. news. This 8 p.m. Nigerian time. How do I know Nigerian time? There's a place for time in here where you can adjust time. Look at this place where they write 7:30 p.m. It's the same with my time here, 7:25 p.m. So the difference is about a few minutes difference. So if you click on time here, you see I have GMT Casablanca. I can change it back to my time here, so I can be in consonant with the time. So the timing for this timing is not coinciding with my time. So if I change the time to something, I'm seeing it's like I saw West Africa.
I think you have to go up, further up a bit.
That's all we have here.
Okay. Yes, West Central Africa.
All right, we now have West Central Africa and safe setting. So this is not going to add to your trade. It's not going to add to your analysis. It's not going to subtract from your analysis. It's not going to make you correct or wrong. It's only going to make your time 7:26 and your time 7:26. It's going to make your time synchronize. So you are getting the news results at the right time that is dropping. You are not lagging behind. So it's telling you that, look, there's nothing that changed here. This is 2:30. This is 8 p.m. It didn't change. Nothing changed here, right? So even if you refresh, it still will not change. It's still the same thing. So it doesn't add or remove from you. So, but just take note of what I say. Wait for the news to drop before you pull your trigger. You do your analysis and wait for the news to drop before you pull your trigger. Otherwise, forget about this pair and go somewhere else. But why would you forget about the pair that will make the move? That means you don't even know what is going on. If you will forget about the pair that will make the move, you will end up being in a pair that will not make any move. So it's better you always engage that pair that will make significant move. Your own is just to be in the right direction of the market after the news has released. That's all. And if your analysis is against the direction of the fundamental, then you ignore the trade or you trade less. Because you are this time around swimming against the tide of the river. It doesn't mean you will die. It means you have to be very, very careful. That's all. So it's okay to swim against the tide of the river. So with that being said, we are looking for anything USD tomorrow and anything AUD. This is 1:30 a.m. for the night, for tonight like this, because this one will happen when people are sleeping. So we'll check that. But before we proceed to check, let me quickly do also the same thing for the cryptos. Now for the cryptos, the easiest place we can easily ask people to go and check is CoinMarketCap. When you come to CoinMarketCap, let me type it again so people don't think, how do I find CoinMarketCap? It's just by typing it on Google and it comes up. Nothing difficult about finding CoinMarketCap. Once you open CoinMarketCap, it opens up like this and show you so many things. A lot of you have not taken time to sit down to really study what is available, what information is here on CoinMarketCap. A lot of you, so many informations are here that can really help you fetch a lot of money and help you manage a lot of risks in this market. So here you have cryptocurrencies available based on their ranking, trending ones, very, very important. But here you have DexScan to look for new assets that are launching into the market. When an asset in the crypto world launch in the market, token or whatever it is, NFT or coin or whatever it is, they first of all launch on a DEX, decentralized exchange, before they are going into the SEC, centralized exchange, CEX, centralized exchange. So you want to know the new pair that are dropping in the last 5 minutes. You come in the DEX, new pairs, trending pairs. You will see them there before they arrive on centralized. You will see them while they are launched in their first 5 minutes, in their first 3 minutes. Is here you will see them. So you now go to PancakeSwap to buy those pens. You go to PancakeSwap. You go to what's that other one? All those other decentralized exchange. I've forgotten. Me, I know a lot. I know where I usually buy more of the time from PancakeSwap. Then there is also Uniswap. I buy also from Uniswap. So you buy those new tokens from that side. But that's not my topic. What I want to focus now is under exchanges. We are dealing with exchanges. This is where we trade futures. Exchanges focus on spot, on derivatives. Derivatives, futures fall under derivatives. So you are going to open exchanges under derivatives. If you open exchanges under derivatives, now it depends on which exchange you are using to trade your futures. Some of these exchanges do not have enough volume in a particular asset. So that movement or that leverage or that momentum will not be too strong there. Some of those assets, there's not a lot of traders trading it there. So you want to check your exchange where you are using to trade to see which one are traders engaging. For me, let me say for now, I use MEXC exchange and I use also BingX. So you see they are both here. As of today, total trading volume on MEXC is $25 million, while BingX total trading volume is $6 million. So no problem. MEXC usually have a large trading volume because they have a lot of people there. So if you open on MEXC, click on MEXC open, it's telling you MEXC was founded 2018. That's not the story. That's not the news we are looking for. That's not the information. MEXC have a reserve of so amount of USDT, 1.4 billion. Is it from $4 billion? They have MX of $92 million. They have USDT, Ethereum of $307 million. They have MX again. This MX is in Binance. This MX BNB. This MX is in on Ethereum Smart Chain. This MX is in BNB chain. So and then they have Bitcoin of 2,209 Bitcoin, amount of Bitcoin, you know, it's crazy. One MX, by the way, is around 3.4 or $4. So they have 92 million MX. It's crazy, man. So that's the money that they have in their reserve. So they have a lot of liquidity to pay you. So this is one advantage that futures traders have over Forex traders, because when you are using an exchange, you will know how much the exchange have. So when you are making money, you know that this exchange have the money to pay you. They have the money to match the market. They have the money to run transaction. Crazy money is in their reserve, and you can load more and see more. So if you go down here where my main discussion is, there is what is happening here on the spot. This is the spot trading going on MEXC right now as of the last 24 hours. This is the perpetual contract. Remember, the futures, we are trading futures and perpetual futures. So the perpetual is the one that we are trading more. The futures is a combination of all of them. So you need to check under perpetual. That is where you have all the list of the futures we are trading. So under perpetual, if you are trading Bitcoin, of course, everything is Bitcoin, everything's against the USDT. So if you are trading Bitcoin USDT, see what is happening there. The current price of Bitcoin is 97. The volume that have been traded today, buy and sell, is $9 billion today. That means 36% have been traded in the last 24 hours. So before you start trading, you need to know what volume is in the market. By the time you are entering the market, you need to know what volume is in the market. By the time you are finishing for that day, you need to know what volume is in the market. Whether, not like knowing the numbers, but knowing if the volume is increasing or reducing. Because you don't want to be in a market where there is no momentum. Volume is what brings the momentum in the market. If there's no if there's not much money coming into that asset, okay, everybody in MEXC, what are they trading? In the simple way to explain that. Open interest, the way it is right now. Funding rate, 0.1%. Okay, now you look at the first 10 or first 20. Bitcoin is number one, highly most traded in the market. Ethereum, Ripple. This particular one is where you want to pay attention. Department of Government Efficiency, blah.com. Doge USD, Department of Government Efficiency. Wow, I never knew that's the meaning of Doge. So this asset is madly in the market as of today, with a high volume of trading of 5.14% in the entire 24 hours today. So if you are trading Doge, now you now have an information that says that number 4 of all the futures traded today on MEXC, Doge is number 4. So there is volume. So if you have a setup, a technical setup on Doge, you want to take that setup seriously, especially if that setup is in favor of Doge. Doge USD, that means going up. So if the percentage of volume in Doge is high, you want to pay attention to a setup that is in favor of Doge, buying Doge. If there's after Doge, you have Solana. After Solana, you have APTOS. Now, I want to go for pairs that are cheaper, or pairs that are cheaper to trade. Pairs like Bitcoin, Ethereum, Ripple, Solana, even Doge, most of the time, they are expensive to trade. If you try to trade them, the leverage available is low, or the amount for you to open one position is high. So you cannot trade them with your $5, with your $10. So you want to go for cheaper pairs who are not so popular that you can trade and make a lot of money. There's a lot of noise going on with this guy, Sui. I don't know what the heck that guy is all about. I think you need to go and study this guy, because a lot of people are cashing out from this guy. And looking at the MEXC action today, is number 7 on the charts of the volume traded today. As of today, this guy $495 million have been traded on Sui in volume, buy and sell. And in terms of the volume moving up, it has moved up by 1.9% today. So if you notice the movement, from morning time, and you are in the trade and you see the movement going higher, and it's still maintaining number 7, no other pair is above it, then you hold the pair. So after, in priority, if I want to analyze futures trade, I don't need to go and start looking for pairs from the futures market. If I come here, I will see what everybody is trading. That is where momentum will be. That's the purpose of this fundamental. Where the majority of traders are, that's where I want to go and pitch my tent and do my analysis based on where traders are, because that is where I will make money. So if I want to pick the first 5 pairs to analyze, please somebody write it down. If right now I want to analyze the first 5 pairs, I will analyze. Number 1 will be Dodge, write it down. Number 2 will be APTOS. So APTUSD, somebody write it down. Number 3 is SUI, SUI. Number 4 is Cardano, ADA, ADAUSDT. Then number 5 is Pepe, PEPEUSDT. Write it down. Every morning you come and check what are the first 5 pairs that you should analyze. Every morning. You analyze them and you check your setup. Is there anyone giving you a favorable setup for a buy position? Don't always think of sell position. I know you can short, you can do scalping to the downside. I know you can trade the downward direction, but guys who are in the bull run, majority of the news coming out all this season will be news that will favor crypto. Therefore, after every move in crypto, the retracement will happen. Allow the retracement for the gods. Wait for where the market is going up, because when the market starts moving, usually the movement is crazy. But in the retracement, it's not going to retrace too long. It's going to stop retracing. Bitcoin can never fall down to $50,000 except there's a massive problem. It will only retrace. And when it peaks and moves. The other day, we call an analysis on Bitcoin at $73,000. And we say the take profit is $100,000. It went there. But we couldn't have called that analysis from where it is and say it will drop down to 70. No matter how clean the analysis is, nobody will pick that kind of a trade because there is no tendency of it to drop down except there's a problem. But there is every tendency for all the cryptos to go high. So always look for an opportunity where the market setup is telling you to buy. Forget about those times where they say sell. It's a good trade, it's a scalping trade, you can make money, but you want to always be in a situation of the buy. Today, one of my friends entered Bitcoin, that same analysis we called that time, 0.01. Today, he made $27 from the movement. He entered with an account of $50, I guess. So massive. So I think that is one of the things also some people need to do when the price drop again to $95,000. If it drops to $95,000 and we see an entry there, you have an account of $50 in a broker that allows you to trade without swap. So you'd read the terms and conditions of that broker. If they allow your account to trade, they can give you an account that does not have swap. Swap means daily charges. If your trade stay overnight, broker charge you. It's called swap. So if you chat with the broker support, say, I would like to have an account that does not have swap. Sometimes the broker will say minimum deposit for that type of account is $500, $1,000, depending. So, but when they give you that kind of account, when you open a position there, you can hold that position for 3 weeks, 4 weeks, and you're not paying every day for maintenance fee of holding that position. So please take note of what I've just said. And to further digress also, one of my friends was showing me oil, what is happening in oil. So for the oil, I think one of the places you can go to is FX Street. If you go to FX Street, you can see more of those commodity fundamentals on commodity to get information, what is happening to US oil, what is happening to commodities. You get all of those fundamentals from that side. If you go to economic calendar and you go to there's crypto here, there's brokers here, economic calendar, something like that.
Simon, CMC.
Yeah, there are so many places. There are so many places, brother. It's not just one place that usually comes up. You can.
Was this CoinMarketCap now?
No.
Okay.
No. What are you saying? This is not CoinMarketCap. This is FX Street.
Okay. FX.
We are done with CoinMarketCap. FX Street. I'm just coming here. It's the same thing as your, what's it called? It's the same thing as your Forex Factory. It's the same thing. It is same information as your Forex Factory. But I'm coming here especially just to look for commodities right now. I just feel I should look for commodities here. It's going to give me a more clearer view. And if I'm looking for commodities, I'm looking for high impact news. And let me just filter it this way. Thursday, Wednesday. So it takes out Monday, Tuesday. We just have Wednesday, which is tomorrow. What we are expecting for tomorrow, there's a full red news on AUD. We saw this earlier before. Then these are not yellow, these are not red news. I wonder why what it's doing here. We just have €1, which was not captured on Forex Factory. Then we have 3 USD. One is here, one is here. Okay. FOMC tomorrow. So if I come back here, I want to check why am I still seeing the medium? I want just high impact. Apply. So it's supposed to reduce everything to a small, this is what I want. Red, 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 red. So we're expecting AUD, we're expecting Euro, 7 a.m. We're expecting 1:35. This is GMT. 24 hours AM, PM. Let me use this. Sorry, please. I think I'm taking so much time here, and it's not really that important for me to take so much time here. GMT +1. Set automatically. Let me see if I can just find West Brazilian, Cape Verde, Central Europe, West GMT +1, Central Africa. So we have 8 a.m. tomorrow for euros. We have 2:15 for USD. We have 8 p.m. for USD all tomorrow. Now, this is one. The second one I wanted to find is the news on oil, commodities, and then oil. So let's start first of all from oil. One of my friends said this, and he was talking about WTI oscillates within a range below this price. And what are people saying about oil? You can come here and read. Oil is probably bull trapping. Navigating the high stakes coin flip of global trade and tariffs, from holiday dip to market flip, algos, rates, and Janet's fiscal time bomb fuel Wall Street. The commodity feed sold starts to the year for oil. A technical view of oil, see the chart started already. WTI. And this is, what chart is this? Anyway, we'll go to TradingView to find out. Oil prices rises at start of the year. Saudi Arabia increases selling prices for oil deliveries to Asia and Europe commercialized by. So if Saudi Arabia increased the selling prices of oil delivery to Asia and Europe, what do you think Asia and Europe will do? Asia and Europe will now turn over to buy oil from Canada. This WTI is a Canadian oil, it's a US oil. So if Saudi Arabia are announcing increase of this to this area, it means these people, the price of oil will also go up. So there is a news triggering this guy to go up, this is one of them, the latest oil news. One of them. So out of here again, let's say we are trading commodity, which is very, very important. People don't pay attention to this asset. And this asset are assets where you can buy and hold for a long time. Under commodity, you get latest news on commodity. Oil is number 1. Oil is number 2. Silver is number 3. Gold is number 4. I don't want to touch those areas. But when we are talking about commodities, I want to see other stuffs being mentioned when commodity is mentioned. other stuffs, I mean, apart from gold, silver, all those other things. I want to see something else that we can trade. Agricultural stuff, everything they're mentioning here is oil. Nothing mentioned anywhere as far commodity concern. Coal and grains. So I can read this. This is talking about AUD, Canada. Gold. This is news on Dogecoin. Cardano. Anyway, the point I'm making here is that whatever is talked about mostly in the market, that the whole world is talking about, different analysts are talking about, that is what will move the market. That is what the market movement will be. So you want to pay attention to that thing that is popular, that everybody is talking about, and you want to go and see what is happening technically on that thing that people are talking about, so you can find a trading opportunity on that popular thing. So with all of these searches that I have done right now, I think if I go now to the charts, the idea of what to trade will no longer be an issue for me. I think this is that AUD USD that we marked yesterday just suddenly appear. This was the analysis we marked yesterday, I guess. Yes, it is. There is an order block. There is a breaker block here. I remember I marked this yesterday. There is an order block here. So the entry is somewhere down here, around here. So we're expecting our entry around this place. So the price will drop, 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 drop. When the price gets down here and show us a sign, that is when we can go to lower time frame to look for an entry. Please don't forget, always remember that. It's very important. That means we are now taking a new trend. This will be the first swing low. This will be the second one. The third one will form. The fourth one will form. The new trend. The new trend have started. Remember, this is a monthly support. And when we pick it up from here, we are going all the way. It has the capacity to drive us all the way to this place, 179 pips or even more, 200 pips. So it has that capacity. So we wait patiently until that happens. There is a particular trade on GBP USD that happened today that we need to see what happened there. First of all, looking at it on the monthly time frame, removing everything on the drawing and turning the monthly time frame back to line. What we will see in most recent occurrence between September 2022 and right now, January 2025, is this particular low that was created here since September 2022, which we are not really interested about it because price is still far away from that low that was created in September 2022. And if we talk about how far is price from that place, we are talking about 1,330 pips. So it's very, very far. So we want to be more interested in where price have visited in the most recent time on this asset, which is this place, which is not very, very far away from that price. This is the next pivot point, or we say the next support area where price went up and came down, stopped there. It couldn't come down continuously, but went up and broke structure here. So this becomes a valid support area or a valid demand area. So we mark it, it's a monthly demand area and it's very, very valid. Then the next time price went up, came down, went up, it came down, it couldn't stop this place. It went up and further broke this structure and went to the upside. It was this place. So we pick up this stuff again and we take it up. Sorry. We take it up here and we mark this particular point in the market on monthly. The next time, again, we saw price went. This one is not really a very strong support area because this price did not break above the previous resistance. So marking this one will not really make any significant will not give us any significant reason. So, but we have to leave it alone, and we focus more on the next one, the resistance level here. Because this one, if you want me to mark it, I'll still shall mark it as the mid-range. So you see that it's actually a turning point, but I don't see it being a very strong one. That is my point. It can easily be broken because this support was formed after price could not break above. So if this support is formed after price could not break, it's a failed swing. Let me permit me to say a swing was formed here, drop down, swing was formed here, drop down. A swing could not form here. A failed swing happened here. A move from here, failed swing. So if it's coming down and stopped here, went up, come back here, stopped here, I don't think this place should hold it. I think it should still drop down to this place. I think so. But then we cannot predict the market. We can only do what the market is doing. So let me just mark it for argument not to be there. So we come down to weekly time frame. When we are there in the weekly time frame, we are no longer concerned about any other thing but what is happening in the most recent time. We have this particular point which I refuse to mark. But if you look at the weekly, you now notice that that point in the weekly is important because there is a support here. So with that, I think I will do something like this now, this time around. I'll pick up a weekly horizontal ray and drop it here and see what we can get with it. Then, because that side is closer to the market, that's why I'm marking it. It's very important for us to take note of this support level. Then also, I'm going to look at what is happening with resistance here. Another one is here. This one is coinciding with this particular one here and coinciding with this particular one here. So it's a zone. So I think I would PT them and I'll bring something like this here. Because if I drag it, it's going to coincide if it was a zone. But then let me just leave it here because this is most important for me. So it's going to be like 1, 2, 3. So there is nothing here. This is a clean move from this side to this side. Nothing really serious here. If I mark this, it's not coinciding with anything to the left-hand side. So I think I look good here. I can now drop down to daily time frame. If I drop down on daily time frame, I see that, oh, there's something that looked like head and shoulder happened here and completed. Then the price dropped down to this weekly support. It came back to this monthly kind of resistance. It's not a very strong resistance anyway, but then it was formerly a support. Now it's like it's turning to a resistance. If price break above and set up, we are going higher. If price break below and set up, we are coming down. So you take note of that. So if you come down here, we are going to pay attention mostly to what has happened in the most recent time on the daily. And I'm still taking note of this guy, which is a support here, is important. Then all these ones, we are not going to pay so much. They are going to be liquidity areas, right? So if I change back to candle, I'll notice that, okay, if this is what we have right now, I have something that look like a, what's it called? A trend going down, a trend to the downside, a push to the upside, lower high, another push to the downside. That is a trend that is forming here. Now, if this price is able to go back to the top side, then we can bring it down. We can sell. Continuation of a trend. But on its way to the upside, if we want to look for an entry to the upside, the safest place to look for an entry will be if the price close above, of which I've seen this 3-candle pattern, close above here, pull back here, then we get a setup from here, we are going up. Otherwise, if the price drop below, it's supposed to actually drop below, pull back, we're supposed to look for a drop to the downside. So we are currently at a very important level, a key level, which was previous support, a break of this support, a pullback to the support, If we see a sign here, a break to the downside here, daily, a pullback to that downside, a continuation to the downside, to be our entry to sell for how long? From here, if we find an entry, down to this place, 117 pips. But if the price, from the way I'm seeing it, is showing sign of morning star, but remember that the morning star is just a sign. It's possible that this could come back here and give us an entry before we go up. So we now have a complete W pattern, move, move, move like this. Or we wait for this guy to go up, pull back, give us a sign on smaller time frame H4, so we go up together like this. So these are the two ways to go up. Either we wait for price to go up, set a structure, come down here, especially if we can break above these guys. Then we pull back and get an entry here. I'll appreciate it. If this candle can close as a bullish candle and close above this area, I will appreciate. A pullback to this zone again, we'll get an entry to go up. That's two ways to go up. What about going down? If we are going down, I need to see price do like this. Close below here as a bearish candle for today. We are in daily time frame. Then tomorrow afternoon, pull back. If it pulls back tomorrow afternoon here, and I find an entry, remember there is news for USD around 2:30. If that news says USD is strong, green USD, I'm going to sell from this zone here down to this place, take profit 1. If it breaks this place, pull back and continue, take profit 2. So this is the plan. So let me leave it here for now, 100 pips. Now let me also remind you that this would be a good trade because that's 2:30 tomorrow, not right now. Depends on what happens tomorrow. If we are selling, that's the opportunity to sell. I want to look for a writing material. Remember, this is a support area. Remember, this is a support area. Remember, this is the break of the support. Remember, this is a pullback to the area where we have a support. If this candle closes as bearish candle, we want it to drop down. And tomorrow we have a pullback to this same zone where we have support, now turn resistance. So we'll look for our entry from 4 hours, our setup from 4 hours time frame. Then go down to look for our entry to sell this guy down to 100 pips and more. If the news comes out in favor of the US dollar by after 2:30, I beg your pardon. Okay. That's why I don't like using this drawing tool, because to come and remove them will be stressing me.
Once you click on delete by your left, you delete everything once.
Okay.
The delete by the left, actually, where those icons are, those drawing, the bottom, you see delete. No, keep scrolling, just go down. No, sir, this same left bar, you see an eye, there's a padlock where you see a blue magnet by the left. The first icon from the bottom at the right side, at the left side, sorry. Extreme left wall, yes.
Okay.
Yes.
Okay, I've seen it. Thank you. All right. So that being said, so right now we are now here on the GBP USD, and we have said what we needed to say. We have done all the mappings. We want to see the setup on 4 hours time frame. Forget about all these plenty lines. Your line is not supposed to pass 3. You need only 3 lines: the support, the trading range line, the bottom, the middle line, the mid range, and the where you are going to the target line. Don't have so many lines. Don't be found having too many lines. It's going to be too confusing. This is where price is right now. This is where price has come to. We are having a sell trend, like the trend is downward. So if the trend is downward, what do? We look for position to sell. The only place we would have sold this price was when we had these guys. This is a break of, we'll come back here again. I didn't see any reason to sell from this. I didn't see any reason to actually enter a sell here. But what I can say here is if I want to sell, I would rather wait for price, because there's support here. All these places are support area. I'd rather wait for price to close down into this range, then pull back, then give me a setup here so I can now sell to this side. And if that is happening, that means my new trading range is now, let me use this guy now. This is my new trading range, this place and this place. That forms my new trading range. And if that's my new trading range, I want price to break here, pull back here, because there's a monthly support or resistance here. There's a monthly zone here. So I wouldn't expect price to go up again. There is a zone here that can push price down already. That zone to the left-hand side is responsible for all this noise you have here, all this support you have here. So I wouldn't expect price after breaking below to start going back up again. Rather, I will expect price to show me a sign here. If price show me a sign, I will take that sign. Remember that if we have this range from here to here, you bring your Fibonacci and draw from swing low to swing high, you are still okay if price gives you this area. You are still okay if price gives you this area for you to sell to the downside. Because if USD comes out positive tomorrow after 2 p.m., you want to sell GBP USD. You want to sell it. And if that be the case, then your best entry would have been around 1.2493. But you need to see a drop first, then a pullback before you get a setup on 4 hours time frame. When you get a setup on 4 hours time frame, you drop down to M15, M30 to look for an entry. And then you go. This is very important. So we keep this in view, and maybe we'll just put a reason to sell. I'm going to take this guy here because of all these things that are here right now. And I'm going to draw it down this way. So we have something that looks like 1:1.5. Let me see. 1:1.4. So what I will do in this case, I'll use a smaller lot size because the stop loss is far away. How many pips stop loss? Stop loss is 87 pips. It's very crazy stop loss. So I think it's even giving us sign of not taking the trade. The stop loss is too big. So it all depends on the setup. If the setup comes out to be maybe somewhere here, it reduces our stop loss. So we can find a stop loss of 50, 80 pips. Makes sense. And this is not the final bus stop. Okay, this is where we are going. And this is not the final bus stop. After the break of this weekly, we are still going down to this point. So it's possible that that might happen. And tomorrow is FOMC. FOMC might still push it down. So this is the idea if we are going to sell these assets. What if we are going to buy these assets? If we are going to buy this asset, what we need to see tomorrow after the news should be price doing whatever it's doing, but then going to break this level here. If price breaks this level, or perhaps even this level that was created. This move did not break any level, so it's important that we note that. This move, this bullish move did not break any level. This was the previous level we have in the market before now. So all of this move that happened today did not break that level. So let me take this out. Let me take this out. Okay, let me leave that one. Let me take this one out. This move did not break any level. So there is no market structure shift here. So we want to see something that will cause a market structure shift here. that will be something like this. We want to see price go cross a market structure shift here, a close of candle above. If we can have a close above this place and candle wick high, no problem. Then if that happens, our market structure shift happens here, then this green candle becomes our order block, failed order block that could not hold this price. So that becomes our entry areas from order block. Anywhere order block is good. Bringing it down again to support is also good. Bringing it down, 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 down is still very good, but not below whatever was created here. This place becomes a new low. If price goes up, whatever we have left here becomes the new low. So before we close below the new low, we have our entry. Anywhere we have the setup, it becomes our entry, and we take it to the upside. That gives us a type of head and shoulder. And this upside, this time around, we're taking it all the way to this place. All this place becomes liquidity, which is very clear. So if this happens, if we have a break of this structure, a BOS here, we are good to go tomorrow. That means the dollar is bad. That news means if the dollar is bad and we have a break of structure and a pullback and a H4 setup, then we go up. It means we are going up. If we are going up, that means our stop loss will be under whatever support was created here. I don't know how far this can go. It can push down, we get a support, or it can just be going up. Our support is here. Whichever one becomes our support, we can leave our stop loss there because we have a monthly support here that should hold the price. If price go up, come down. If we have a support, we have a monthly support that is holding this price, holding all these prices here. So we'll put our stop loss under that support area, give it a little bit more space. Let's see how many pips stop loss is that. 55 pips. Very, very nice and good because we have a monthly support, we have series of supports there, and we have some little space there to count for it, about 10 or 15 pip space. Then our take profits. After the break of this place, a pullback, the continuation, we expect it to go all the way to this weekly resistance. So if this is the case, if we are going up, this is what we have. If we are going down, that is what we have. Maybe some people will even like us to put it here. Oh no, let me just leave it here. Pull down, push this way. Our entry is here. We are going down. Stop loss is above this guy, other block. Because this guy can push down and go up to the other block. So that is why the stop loss is far away. It can go from this other block, can push down, break through this monthly supports. So it has qualified to be a strong order block that has broke back into the range. Then a pull back to that other block, destroy this range entirely, then we drop to the downside. But if it comes there, that range should be respected, then we get an entry. That is my humble opinion about buying or selling these assets. So that is it. So let me leave this one a little bit and analyze Pepe on the same trading view. All the time now. 10 minutes past 8. Pepe. Monthly chart. Nothing really happening here. There's a bullish push on the monthly. December was bearish.
Bearish. Let me take the energy.
I say bearish. December was a dodgy, indecision. January is pulling back. To what extent, we don't know. Change back to line. The only thing we could see in line will be this. This is where the move started from. Or even technically, if you look at this, there is a ponton resistance here.
100%.
I think it's important to note. Okay. Stay here, stay here.
Okay.
Then there's also another important level here that could be a break retest continuation, Pepe. We saw something like that happen here at the beginning of Pepe, so I think we should expect it here. If we drop down weekly, most important area for us is here. I'm not seeing anything apart from this guy who is telling us to expand that monthly zone. We have expanded it. This guy already taken care of. We can expand it to cover it properly now because it's both monthly and weekly. Like this. Then nothing we see here right now. This is dealing with this guy. I want it to come down before we go up. I won't draw any line here. There's no pivot here. Come down to daily. This is where we need the candles. So we have the price break through a monthly resistance nicely, which is very important for us. Pull back, push up again. Another break, clean break. Clean break of structure to the upside happened here. Clean one. Very, very clean. We can't hide it. This is on a daily candle. This happened clean one. We saw it. It's happened clean one. Broke above. After the break above there, price came back, swept this, formed a new low. After break of structure, formed a new low. Very important. So after here, this place becomes an important area, mitigation block, if this breaks a structure. But if there's no structure broken, we don't want this place to be broken anymore. If this place is broken, they will come down here. And there is a support here. So we want to see whatever happening around here. Daily candle. We want to see whatever happening around here. That means something like this. Yeah. Then something like this. Because price may not come down as we wish. It may just continue going up. So we have to take note of the trend, breaking of the trend to the upside. So we can engage. However, if we get price coming back to anywhere here from this guy, this support level, we are going to take note of price at this zone. So we'll come down here to look at what we have drawn. Now we have something that looks like this on Pepe. Maybe we can adjust this part just to take care of this side. So, trend. So there is a trend that price has formed on Pepe. Adjust this just to take care of things. I really don't like to adjust those lines again, but then just to make us feel all right, we're supposed to draw those chart patterns on H4, not D1. So if we have this structure like this, and we have this support that was rejected nicely like this, push back up, price formed here, break of structure here, happened here, clearly broke the structure. Take note of it. The structure was broken after the support was rejected. Don't underlook it. And after it was broken, price came back and tested this area, which is area of, it's not a breaker block because price did not go down, right? So we can say it is, what's the name? Since it did not go down, what's the name of this guy, this area? Who can tell me the name?
Mitigation.
Mitigation block. So price is currently at the mitigation block, this particular green candle. That's where price is right now. So we can look for a buy on Pepe because we are currently at a mitigation block. Price break above. Right now, our mitigation is pushing off. Now, the size of the push we're expecting is from this neckline to the place where price went to. We're not expecting so much move from here to here. This is the size of the mitigation we're expecting, the push we're expecting. So this same size is what we're expecting. After the break, we're expecting price to come at least to this point. This point coincides with this particular order block that is responsible for that damage to the downside. So we'll take this away. And I'll take this away not to bring confusion and bring this guy. What's the name of this guy? Parallel channel. We use it to mark fair value gaps and order block. So I'm expecting price. This order block is responsible for this break of structure to the downside. So it's a valid order block. Then, I don't want too many lines. Remove it. We're not using it. I just use it to explain. So if price give us a setup here, we need a setup. We cannot just enter because we are in mitigation block. In fact, see the dropping, see the momentum is dropping. It's scary. So you don't want to catch a falling knife. Rather, you want to see a reason to enter. If you look downward here in terms of looking for entry, we are now looking for a reason to enter. We want to see a sign that we should start entering. If you look down here, there was a move that sponsored this push. Here, there's a fair value gap that was respected nicely here. Price could not close below the fair value gap and price push up. So, but then there is also here we have this green is the other block because this green is lower than this red. So the last candle that happened before the push started to the upside. So this green candle is the other block. So right now, price is inside the other block. Therefore, this mitigation block is coinciding together with an other block. Let me not draw another one. Let me just draw the two of them. So we have two zones, mitigation block, other block H4. So we want to see a sign. We want to see a sign, something like this, bullish engulfing. After bullish engulfing, what happened? We look for our entry. Because we know we already have a bullish engulfing, put the stop loss under it, and we look for our entry. Boop, 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 boop. We've made some good profits. You think that is small? If you go to smaller time frame, you know that this is not a small push. It's a movement from here all the way to this point. 190 pips in terms of pip value. In fact, pull back and continue going up is 184. So it's a serious move. So you don't just want to enter. This is quite scary. You want to see rejection. You want to see rejection one. You want to see bullish engulfing. You want to see morning star. When you see it, that's what forms our W sign in a smaller time frame. When you see it, you look for an entry anywhere around here. Then you go all the way to this point. The first take profit is this guy. The second one will be somewhere far away. Let me see. This one. So this is what we are looking for on Pepe. We don't know how far it will happen, but it can take the whole of this space, even down up to this space. It can take all those spaces before we have our move. So I want to make it clean. I want to make it clean so people can be able to. In terms of trend and Fibonacci, let's bring in Fibonacci and trend. This will be the swing. This will be the high. This will be the drop. So pick Fibonacci, swing low, swing high, the drop. We are under 618, 786. So we are in a key level for that movement. So we are buying at premium, correct? Yes, premium. We're buying as premium. What else do we need to check? I think we've checked everything checkable. Now we are looking for a reason to enter. It can be bullish engulfing, Morningstar candle setup, but H4 must show us a reason before we go. Once we get a good reason on H4, we are going up. And of course, it's good to buy the dip. So when it starts going up, we have an H4 reason. Sometimes H4 will not show us a reason to enter. Sometimes, because to give us a long, see this thing, let me show you something. Sometimes it might do something like this. So where you're supposed to enter on the fair value gap, you didn't enter. Then when it returns back and gives the bullish engulfing, you now start looking for entry here. And it brings you down before you start going. So it depends. So if you check on H4, you are not getting it, you could check on H1. Sometimes the reason to enter will come from H1. You see all this weakness? It's showing you that these bears are tired. They are no longer as strong as the way they used to be. They are now getting weaker, 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 weaker. Now we want to see the push. Once the push starts, a pullback will enter that push. Maybe I should remove this guy so you don't get confused. It may not be zigzag. It may just be bullish engulfing, pullback, then we move. This place, all is a clean zone all the way to this side. That's the point. So let me remain here until we see a reason. So is there any question? Please, if you have any question, this is the time for question. I've done one of the analysis on Forex. I've also done one on crypto. If you have any question, this is the time for question. Our time is up, 24 minutes past 8. I have another class by 9. I need to just catch some breaths. Kindly 2:30 a.m. or p.m. sir. 2:30 now, afternoon time, 2:30 p.m. The Forex time is usually 2:30. That's the New York market open. It's 2:30. It's not a.m. Anything US dollar, GBP, all those assets, gold, silver, always allow it to happen after 2:30. That's the best time your setup can make a lot of sense. Then anything euro, in fact, some of the time the GBP itself, and any assets under the Eurozone, mostly in the morning. In the morning, around, let's say, 8 a.m. to 10 a.m. That's the London session. So you want to pay attention to any news for 8 a.m. for the Eurozone. So after that news, you can enter your trade after 10 a.m., sometimes 11 a.m. So you trade until 4 p.m. Sometimes when you trade until 2:30, you have to exit your trade or shift your stop loss to break even, because the 2:30 can go against the 8 a.m. 8 a.m. is London open. So that 1:30 to 2:30 is New York open. You know? So there are the two very, very important times that you want to observe that time first before you open your position. You want to see what market has done before you jump in. Right? It's very important. It's very, very important. If there's any question, please, I would like to take that question before we go. My time is up. If there are no questions, this is where we end the class. Let me quickly again call the attention of everyone joining this private class. It is a private class. It is not a public class. So if you know you are not supposed to be in this class, please do not attend the class tomorrow. Tomorrow is Thursday. Yes. This class is a paid session for people who have paid. So if you know you cannot afford to pay for this class, you should not be in this class. I have recorded this class for free for everybody who cannot afford to pay for it. Go to the YouTube and watch it free of charge. So the reason we are having people on WhatsApp is so we can attend to their question either in the group or live on the call. And those of you now in the call, if we are in a class, you need to come with questions. Come with questions so that those questions you are coming with will now be a reason why we need to take a particular topic the next day. If you don't, all I will just do is to analyze any two pairs, call the trade possibilities, setups, and stop loss areas, and then we go. So
Okay,
please
so I have a
always.
question.
Hello.
Yeah, I have
good
two
evening.
questions. Yeah,
Okay.
go ahead.
I think let the other guy shoot before I do.
All right.
Okay, I should continue.
Yeah,
Kindly
continue.
I
continue.
should go ahead. Okay, good evening now.
Yeah.
Okay. Now, I was talking with you before now. You said it's almost time for the meeting that I should come with the question to the class. So I don't know if it's still okay for me to ask the question. And that makes it
Please ask your question.
try to
Yes,
find
ask.
the okay. Where to actually get those assets to make it easier for one to trade. Maybe if a coin is or has gotten to the overbought zone or to the oversold zone, so I can just go and watch it a little before you can make your trade. It makes it easier. So when I ask that question in the afternoon, say I should bring it to the
So your question is, where do we see a coin have gone
Yes.
to overbought so that we
Yeah.
can sell it? Or
Yeah,
where do we
yeah,
see
yeah.
a coin that have gone to oversold so that we can buy it?
Mm.
That method of trading is for children. Professionals do not trade like that. As a professional in the market, when an asset goes to overbought or oversold, it's not the reason why you should buy it or sell it. It's a reason where you should pay attention if there is going to be a reversal or not.
Mm.
I'm trying to log in now, but it's not logging me in, no problem. If you come on the assets area on MEXC, for example, you will see, this is not the futures, no wonder. On the futures area where we have M futures, USDT. Why is my screen not opening? Just a moment, please. I'm trying. Mm. All right, I'm back. Requires me to open a VPN, so I'm back with the VPN now. I should have the chart now. So if I come to features, am I on features? Features, yeah, I'm on features now. I opened the features area, the list of assets. I'm seeing the 1, 2, 3, 4, 5, 6 top assets on MEXC as of today. Number 1 is Bitcoin, -1, 24 hours movement. Number 2 is Ethereum, -1. Number 3 is Sonic USDT. I don't know what the heck this guy is. It's a new coin that
No,
was listed.
Sonic is FTM. They just switched, converted from FTM, Phantom Wallet.
Then number 4 is XRP. Number 5 is Solana. Everything is down except for this madman. I don't know who he is. I don't know who this guy is, but the entire market is down. So don't be deceived by this guy or this guy. The people who are bringing in these people are the ones pumping that momentum. So the original direction of the entire market today is what?
On Sonic.
No,
It's
not
down.
Sonic.
It's down.
Down. I'm talking about the general crypto market today
The
is
general
down.
is down. It's down. Yes.
What about this guy and this guy? The major cardinal pointers for the market direction is 1, 2, 3, 4, 5. 1, 2, 3, 4. Which one am I missing? Bitcoin, Ethereum, Ripple, Solana. Maybe you add Doge if you like. They are the major cardinal pointers. If these 4 guys are down, it means the entire market is down. Every other one that you see that is up by 16%, 15%, somebody is pumping something. There is a magu going on there. There's a market maker movement. There is a ojoro happening there. And it's allowed in this market. So if the entire market is down, what do you do? The only thing you need to do is to sit on your hands and wait, because the market is not supposed to be down. It's only going to be down for a small time. As a matter of being down, if you check how far has the market been down on 4 hours time frame, it has been down 1, 2, 3, 4, 5, 6, 7. 7 times 4 hours time. So it has been down for a long time. So it means in terms of analysis, if the market is going to start rising up, let me remove my indicators. Moving average, go away. Volume, go away. All this MA, go away. Confirm. Clear. If the market was to begin to rise, where will the market begin to rise from? I will have to check from the analysis. It broke this place, bullish momentum. It came down below. It ignored this guy that was responsible for this swing. There was a swing here in the market. Remember when we started this class, the first class, I was talking about when you come to H4, you mark your swing level, all those trainings I was doing at the beginning stage for newborn babies in this market. A simple trading analysis where I gave you a free PDF book. This was what I was teaching. So from this support to this resistance, if market start dropping, market comes here, you look for entry. But also later on in the class, I say, if this guy is responsible for this swing, breaking this other low, so this guy becomes this red one becomes an order block that brought this price down, or in this case, this other block has failed. If there's a failed order block, price is supposed to come down here. Within that failed order block, give us a reason to enter, we'll go to the upside. If that does not happen, the next move is for price to come down, to look for a support here. If price gives us support here, that's OTE, or even bounce on this and give us a support, that gives us double bottom, and then we go up. So whatever you are doing right now, you cannot look for an entry until anywhere from $95,000. If you remember in my discussion earlier, I mentioned $95,000 Bitcoin. The reason why I'm mentioning 95 is because there is a neckline at 95. Which we can say price broke that neckline and never tested that area before. That neckline is a mitigation block of a green candle zone. So you must know where price is beginning to move from. And when price begin to move, my idea or what I'm trying to say to you is that when price begin to move, price should begin to move from the Bitcoin movement. If Bitcoin start picking up, Ethereum start picking up, Solana start picking up, that is when every other asset is supposed to also join. And at that point, you should now look for the asset that is still down. That's where that your overbought, oversold can come in now. You look for asset that is still down. That is where you should begin to trade that asset. So this place where I mark, this is where price is supposed to begin to rise from. Why? Because there is a breaker block here, not a mitigation block, because this swing failed. It's a swing low, push to this point, this high, failed to go down below that swing low. That means this place is our breaker block. Our SL will be under the main breaker block here, this one here. Then we move from this. Okay, this is the breaker block. I beg your pardon. This one now will now be the move to this the mitigation block, I beg your pardon, mitigation block here, like other block that is responsible for this damage to the upside. So we have a mitigation block here. We have a breaker block here. So here or here, anywhere the price can get a new support. Price needs to form a new support. That is my point. I'm not sure it's going to form that support here. I'm not sure this guy is capable of holding the price. I think it will come down into the breaker block or even the mitigation block down here to 93. Many analysts say it will not come down to 93 again. The worst it can come is 94, 200, 94, 192. So, but then if we have a setup, we need to have a setup here. If we have a setup here, we can begin to look for buys. So any move in the next 4 hours by tonight, we begin to see the rise of all this crypto again. Then we can ride that rise to the upside. So when you analyze Bitcoin, it gives you an idea of when to expect the market to become green. Because the first question I asked all of you now, I say, what is the general overall direction of the market? Everybody say the market is down. Why is the market down? Because Bitcoin is down. So when will the market come back up? When Bitcoin comes up? When will Bitcoin come up? When we check the analysis. And we see that any moment from now in the next 4 hours, if this current 4 hours close bearish, the next 4 hours close bearish, and the next bearish move is a weaker bearish move, and we see price begin to show signs of weaknesses, and we see a setup from the next 4 hours candle, then probably at the middle of tonight, we'll begin to see all as Bitcoin turns green. This one turns green. This one turns green. At that level, that is when we'll go and pick a weaker pair. I won't even pick any of these ones. I told you today, I have taught fundamental analysis on crypto. You come down to MEXC, if you are trading MEXC, you check what is the majority of coin that has the highest volume in Perpetua. The answer is Doge. The answer is APTOS. The answer is SUI. So that's what you go and look out for. You don't need to be stressing yourself like the other people used to do. In the general class, I taught them. I said they should be searching for pairs. You don't have to search for pair. You know what exactly to look for. Now I've lost my MEXC. Where is it? You know what exactly to look for? APTOS. APT. So when this coin begins to turn green, APT, this one, I think is, am I right? Let me confirm again.
APTOS, Aptos.
Yes, Aptos. So the acronym is APT. You are
Okay.
correct. So if you pick APT, okay, enter now. After Bitcoin, Ethereum, Solana have already started rising, they have entered their zone. They show sign that we are beginning to rise. At that point, you cannot come down to APT. So with your $10, you can trade APT with a nice, my APT is selling at 9.6. It doesn't matter. With your small amount of capital, you can trade this one. So and not that you just come and enter a buy just like that. You have to still follow the analysis. The same analysis you see in Ethereum, the same analysis you see in Bitcoin, the same thing that this guy is having. The same. It's not anything different. Here, you don't need to come and start stressing yourself. You know already that this guy already breaks structure. You've seen it from Bitcoin. The structure has been broken to the upside. So we are still bullish, even though the market is pulling back. So we are not, the market is not really bearish. It's just a pullback. And the pullback is currently now, we can say, within the breaker block. Look at the breaker block, it's still very intact. This green candle is the highest and is responsible for this damage to the downside. So this particular breaker block is still intact up to this point. Then there's also another one, this push, this swing here, this high here, responsible for this push to the downside that brought to this candle here. So this candle here also is also another place. So up to this point here. So we are expecting this thing to fall down up to 9.04. Anything below 9.04, break and retest of 9.04, we are targeting this guy. So once you see this price, what will happen to 9.04? Will it break, retest, and continue downward? Or will it reject 9.04 or before 9.04? Anywhere from where we are right now, we're supposed to see a setup. If we don't see a setup, we'll keep waiting until we see 9.04, 9.03, 9.04. And if that happens, if you are here with me in the beginning of this class, I wish I could find this. I didn't find it, so let me just use my hand to draw it. If you attended one of the classes, we drew a pattern like this, and I'm sure those who attended the class, they will agree with me. This is, sorry, this one. Yes. This is the left shoulder. If we do like this, this would be our shoulder, and this is not very good. Sorry, let me reject this one. Let me do like this. This one is the left shoulder. This is the neckline. This is the head. This place, forgive me, the drawing is not too clean. We want to see the second move break this place. It's usually a very good sign. Then the last move is the second shoulder. It can form here, vis-a-vis this guy. It can also form here. It doesn't matter. So when we see a setup here, we see a sign, then we are good to go. From here, we look for our entry. When we get our entry around this place, we are going all the way here. So the man asking for the size of our entry here is the same size of our take profits here. So we are stopping here. So the man asking for where to see candle that is oversold. This is what you must do first of all before you look for candle at oversold. After the candle coming oversold is done oversold, do you see a sign of bullish engulfing? If yes, is that bullish engulfing happening at a key level? Any of the institutional reference points, or is there any of the reversal pattern? Have you seen the engulfing candle or the morning star candle forming at any of these zones? If the answer is yes, you drop down to smaller time frame, look for entry. In the case of crypto, you don't need to drop down to smaller time frame. You just, once you see the bullish engulfing, engage. Just wait for a small pullback, engage. In Forex, you have to drop down because mostly the risk management is crazy. So it's going to kick you out of the market and still do its thing. But in crypto, you can drop down your risk to the smallest amount you want to lose, maybe $2 or $3. And I will not repeat that class because I think I did that class on the second day of this training. So go back and look for day 2 on my YouTube. You will see how to reduce your lot size to $2. You reduce your risk to $2. Even though you have an account of $100, you'll be risking $2. If you want to reduce your risk to $5, I have taught it already in the class. You reduce your risk to $5, no matter what happens in the market. If you like, bring the stop loss here. Even if you bring your stop loss here, you can still put your risk as $5 here, knowing that the price would never come to $5, to where your $5 is. Anywhere the price turn back and start going up, it will go back and put you in profits. So your trade can spend as long as 4 days, 5 days, 6 days. Your $5 is still very intact. It will not touch your $5 because that is the swing low. It will not come below that side again. It has already broken to this side. Anything will bring price to this swing low, it means that that market is now a bearish market. A break and retest of that market should be a sell structure, and you should recover back your $5 because the market is going to sink. So I think I've been able to clear that part. So the direct answer to your question, don't just look for a pair that is on oversold to buy. First of all, check if all the assets are down. If they are down, wait for Bitcoin to begin to come up. When Bitcoin begins to come up, Solana is supposed to follow, Ethereum is supposed to follow. Forget about all of them. Go and check for the next volatile pair. Check from CoinMarketCap under MEXC. You return here. That is the asset you are to trade. There are about 5 of them. SUI is one of them. The same analysis. Look for where they drop down. Look for their key areas. Institutional reference points. Any of the institutional reference points. That pattern. Look for an entry. H4 confirmation. Bullish order block. Or bullish Morningstar. Engage. Open your fire. Put your risk management. Don't ever forget that one.
Kindly,
place your
sir,
can
for
trade, yeah.
those who are not using Mexi, let's say Bybit or Binance, can they also do the same thing?
The same thing on if you go on CoinMarketCap, you check Bybit, you may not see these apps there. You may not see apps there. But sometimes it's like that. Some of the pairs you see on Mexi, you won't see on Bybit at a particular time. Sometimes on Bybit the leverage is low, on Mexi the leverage is high. 5 reasons why we are using Mexi: because of high leverage, they have money to give us leverage. Number 2, because of cheap execution. On Bybit, you pay a high spread fee for any trade you execute. On Mexi, you don't pay anything. You just execute a trade at zero. It's when you are coming out of that trade, you pay a very, very small fee. If you compare all of them, you see Mexi the cheapest where you trade future. So, and also on Mexi, the rebates are high. Bybit are paying around 20%. Mexi is paying 50% rebates. So there are about 5 reasons why we will use Mexi to trade. Also, if you use Mexi to trade, they'll give you extra $20 added to your $100 when you make deposits. So it's crazy. It's not done on Bybit because Bybit is too big. They cannot do that. So they have enough customers. Mexi, they are still taking in a lot of people into their system and they are still giving out a lot. Mexi have the highest airdrop on all the exchange, centralized exchange all over the world. They have the highest launch pad. Coins are listed on Mexi more than every other exchange per day. So the activity and news, the information, the paparazzi is on Mexi. Apart from Mexi, the next place I want to always go to trade is BingX. So before I even reason Bybit, I'm talking about withdrawal, not even trading anymore. Because you don't really have a lot of volume. So going there to trade. The reason why we have to trade in Bybit is because during withdrawal, we have to transfer to Bybit. So if you trade on their platform, you have more, more advantage. So if you are not trading with a lot of money, why will you be pushing it to Bybit? Trade in other places where you get more advantage than to go there. Ladies and gentlemen, I hate to leave your presence.
I am the person who has the other question.
Yeah, what's the second question?
Okay, sir. So I think you've answered most of it, but I just wanted us to have an overview. Is as regards that phantom. So the analysis you mentioned, what's it called now? The fundamental analysis now. So for this particular pair is FTM USDT is on Bybit, is also on Mexi. FTM, yes, USDT perpetual. So there was a move it's made earlier. Okay, I think this is what they're trying to liquidate to Sonic. There's a merger, I think.
Okay.
Yes. So, sir, in situations like this now, would you advise one to this is the more reason this particular coiner it's going down. It was at 1 point something earlier, but it's going down, and that other one is going up. So, sir, what will you advise someone as regards this particular pair now to trade, or can we go short it here, keep shorting it, or we should just forget about it to take advantage of the market?
On here, let me do analysis on here. Shorting or longing is depending on what kind of trader you are. Is it FTX?
FTM. M.
FTM. Whether you want to short or you want to long, everything is seen here clearly. There's no any doubt. What trend is the market?
Currently it's a bearish trend.
No.
What I'm expecting, okay, is an uptrend. It's an uptrend by looking. But sir, considering the fundamental analysis.
Hold on first. Before we go to fundamental, let's do a technical. Let's know where we need fundamental.
Okay, sir.
First, technical. So here, let's see. This is a support area. Weekly support. Use there's no this thing here, so let me use weekly support here. Resistance here. It broke this side. This is important because it's coincide with this. Here's resistance, broken, revisited, push, break, and dipping down, heading to this place. But heading to this place, there is something here. This is important as well. It's important. See this, see this, see this, see this. So it's important. So we have to take note of it. We are done. We come down here. Here, we don't have any business with every other historic part. We have business with what is happening right now. So go back to candles. Before we go back to candle, I want to take note of this place. So what is happening here is more like a reversal trying to happen, because we're in a bullish trend overall higher time frame. And we are in area of several weekly support, 1, 2, 3. So a reversal is trying to take place. And if you look carefully, this move from this resistance down to support, the move already showed the first sign of a reversal, bullish engulfing, and already created the neckline for that bullish engulfing, and also pull back down to the OTE, ultimate trade entry area, for us to begin to buy. So why would I want to sell this move? I will only want to sell this move if I see a break below this candle close and a pullback to that area, then I'll sell to this downside. Apart from that, I will not think of selling this asset. We are currently at a reversal point. A W pattern is currently going to happen right here. So what I want to do right now is to say, if this is going to give us a push to the upside, I will come down to H4 time frame to look for a pattern. I'm not interested in history. I'm interested in what is happening here. And the swing in this pattern still remains here, which is our trading range. This is our swing low, then this is our swing high. So that's where we are targeting. Good. So if this, let me make it dotted line so that it can be separate in your eyes. You can see it separately. 55, I have 5 minutes to the class. All right. So right now we have a push from this swing low to this swing high. We have a Fibonacci pullback to 786. I can prove that to you. 786 we have there. We have a pullback up to 786, and price is beginning to reject. We don't know if it's going to reject. But then, if price is able to close below this weekly support, it's a sign that price is going to head to our double bottom. And if price head to double bottom, we are going to look for a bullish engulfing and enter for a buy all the way to the top. But if price goes down to, this place is too small for myself. So if price want to sell, I want to see price drop down, close below this place, pull back anywhere here, sign of bearish engulfing, I will take that trade to this side down. So if I want to sell, I want price to break down, break 0.66, pull back, bearish engulfing, then I will sell like this.
Okay.
This is the only reason why. If I see a break of this low, I'll sell. Either this low or the close of the candle. Anywhere around, if price can close below 0.6755 and pull back, I'll look for a pullback. After that pullback, I'll sell. But if price cannot break, if this turns to a rejection here, if it turns to a rejection, I see a bullish engulfing. This is 4 hours time frame.
Yeah.
If I see a bullish engulfing, I'll buy. I'll buy because we are currently at OTE area. The support is here. I'll buy anywhere here if I see a bullish engulfing. Therefore, if I see price give me a bullish engulfing, a pullback after that bullish engulfing, I'll buy. My first TP is here. This still remains my support. My second TP, this is weekly, so I expect it to pull back before they go up again. Maybe they can do like this for another entry for some people before we go up again.
Okay. So the first entry should be at, let's say, peradventure, if it's going up around, let's say 0.69-ish.
Yeah, around that zone. But then before we decide that, we need to see a green candle.
A green candle.
We need to see this.
Yes.
After we've seen this, we need to see a pullback. Sometimes the pullback cannot be deep. It can stop here anywhere. So that's why you have to drop down to smaller time frame to look for the entry. And if you get that here, your stop loss is in that entry is the first support. The second one is here. Therefore, your stop loss is right under this guy. And your take profits is here, it's still good, 1:2. It's here, it's still good, 1:4. So these are two scenarios. So you don't just buy, you don't just sell because the market is dropping. You see a reversal. And from the higher time frame, we notice a reversal going on. So I prefer to look for a reversal to go up than to sell this. If we are going to sell, we are going to sell after a break of a valid support zone, a pullback of that zone, and we'll push down. The only valid support zone we see is this one. And the last time market broke it, market ran back with speed into the range, telling you that it doesn't want to go down. If it wants to go down, this price is weak. All of a sudden, market ran back into the zone, no any pullback. It came back, a little pullback, it ran up again, and even broke this structure here, telling you that the market is beginning to trend to the upside. So a reversal is going on. This is a push, this is a pullback, this is a push again, this is a higher high. Then this is now a pullback to come and clear this sweep this area and pick maybe this zone here. There's a fair value gap here. I don't know if you can see a fair value gap.
Where is that? Okay.
There's a fair value gap here. Maybe that would be the decision point. Now price close below that support. And that is tricky. Let me see. Yeah, it's not very, very tricky like that. Like the support is still there now. Support is still there. And even the daily candle, the weekly candle is still intact. What about the daily? Daily candle is still holding. If the price close, the whole of today, if the whole of today close below here is a problem, it means we are likely to go down here. So this candle determines our move tomorrow. So that is it. So take out this guy. Yo, leave it there. See how it plays out. That is it. So guys, we have to go. My next class is ready. Send all your questions to the group. Send all your analysis, your results. If you enter a trade, let us know so we can join you. Tell us why you entered the trade.